Hello, everybody. It's Andre Vagansky coming to you live from our Brooklyn studio on Monday. I'm standing in for Zach Guzman today, but I've got a special guest with me to co-host today, none other than Dugan Studebaker from Melrose PR. Hey, buddy. How's it going? Nice to have you on the show.
Thanks so much for having me on. This should be fun. Looking forward to it.
We've got plenty of headlines to dig into. We've got a chat later at 10:30 with Mishka from L2B to break down Denkun and its impact. First, we're going to get into some news involving JP Morgan and MicroStrategy, ETF odds, meme coins on Solana. Obviously, Dugan, it's a big deal at this point.
It's going nuts. It's going nuts indeed, man. Just hit it.
We've also got the shuttering of Starbucks Odyssey that we'll dig into later in the show, and also SBF's prison sentence. But, looking at the week, Dugan, looks like Bitcoin's taken a little bit of a breather, down 7% over the past 7 days. And then you've got Ethereum down like 13% over the past 7 days. Meanwhile, Solana really leading the market right now, up 40% over the past, week. But, first story that we've got up on the screen here is we've got MicroStrategy and JP Morgan questioning MicroStrategy's strategy, Dugan, sort of saying that they are adding more leverage to the market. Let's see if we can get that clip up on the screen right here from DL News. JP Morgan saying that MicroStrategy is adding more leverage to the market. For those that aren't aware, within the past few weeks, they bought $821 million worth of Bitcoin, lifting their total to 205,000 Bitcoin. That's worth $14.7 billion. And the stock is up 152% in the past month, Dugan. Pretty severe numbers. I don't know if the rise of MicroStrategy has shocked you.
Oh man, it definitely has. I remember looking at just a week ago. I'm like, oh man, how did I not think of that? Because I was thinking of Marathon and like Clean Spark and like all these other. I mean, traditional investors are probably looking for Bitcoin adjacent plays, in the general stock market. And I can't believe I didn't think it's MicroStrategy. But man, I was like, I missed it. But whenever you think you missed it, you're still early, apparently, in this space. So, yeah, they're MicroStrategy.
Well, it's funny you mentioned that because I feel like when these ETFs came onto the market, one of the first things that I had as a question was, what does that mean for companies like Coinbase and MicroStrategy, where they were being used as sort of this proxy bet in order to get Bitcoin exposure, because you didn't have products out there like the spot Bitcoin ETF. And part of the reason why they've been able to accumulate so much Bitcoin recently is because of this $800 million sale, of convertible senior notes, which essentially allows them to have this offering where they issue a type of bond that people can essentially convert into shares later. And JP Morgan, quote, has said the sale of convertible notes shows that the company, by appearing to transform itself into a leveraged bet on Bitcoin, has also played a part in amplifying this recent rally that Bitcoin has undergone. We've talked about it from a price perspective, Dugan, but MicroStrategy has been out there in the trenches, amplifying the rally, maybe media-wise. Let's see if we can play that clip. He had an interview recently that got remixed into a song, so we're going to
But most of the people who are buying assets at some point want to sell the assets at a profit.
People that use fiat currency as a store of value, we call them poor. We call them poor.
Pretty bumping, Dugan. I don't know what you think there. That really blew up in terms of clip. It's been viewed almost 1 million times now, as far as I can tell.
Yeah, I mean, it's my new alarm clock in the morning. That's what I wake up to now. No, but that is, it's funny. Yeah, almost 1 million views. That blew up. But I think in terms of media and Michael Saylor, I mean, obviously he's the most outspoken Bitcoiner out there. He gets a lot of coverage, but I think he knows his way around a good hot take. And that's how to get attention. And the crypto community is known for making clips and memeable moments. So I think this might be the first of many we'll see of this kind of funny thing. But it's funny, it's not even a hot take. It's just, it's a two-parter. It serves as educating people because it's like fiat. I remember when I'm getting into Bitcoin and learning about all this, no one taught me the word fiat. I talked to my parents, talk to other friends, and they're like, wait, fiat? It's not really a term that gets thrown around a lot, but we're used to hearing it now being in this space. But it's not a hot take because if you look at fiat and you keep it as a store of value, I mean, the more it gets printed, supply goes up, the value of it goes down. And so just compared to Bitcoin, I mean, there's I don't know if it's Saylor that quoted this, but he said there's no top to Bitcoin because there's no end to the amount of money that governments can print. So it's going to be an exciting bull run here ahead of us. But I think this is kind of a fun bull run song to kick us off, I'll say.
Yeah, for me, I almost wonder, I think there's previous crypto figureheads that have said, have fun staying poor or something along those lines. So maybe in hindsight, not the best move in the past, but I do think that MicroStrategy really does inhabit this unique position amid what I'm sort of thinking of in my mind as an institutional rally. When you have these ETFs that are on the market now and they're soaking up all this capital, it only makes sense that MicroStrategy and Michael Saylor would be at the forefront of that narrative because they really were one of those companies that dipped their toes into stacking sats before really anyone else. And so, last week we talked about BlackRock, right? The success of BlackRock's ETF as being something. And MicroStrategy and BlackRock were neck and neck around that 205,000. Just so we got the numbers refreshed, BlackRock's at 230K now. So it looks like Michael Saylor's lead is somewhat gone there. But, it'll be interesting to see how his representation in the media does go moving forward. I know that we've also got Nayib Bukele, the president of El Salvador, who's been pretty vocal recently in terms of coming out and saying yes, we're up on our Bitcoin. I believe last week he came out too and actually doxed the wallet that El Salvador holds part of its Bitcoin in. He ended up revealing a 5,689 Bitcoin position that's worth $406 million. He said, we're moving it to cold storage, essentially, so not selling it anytime soon. I mean, the nation, since it started stacking sats in 2021, people have really questioned the strategy, obviously. And, recently he went on and bemoaned on Twitter the literally thousands of articles about our supposed losses. So I think now as you have this Bitcoin upswing, you saw characters who maybe had a little bit of a, a hard time or faced adversity or scrutiny in terms of allocating to Bitcoin, really kind of having their own little victory lap amid this rally. I don't know about your thoughts, Dugan, in terms of characters who maybe went out on Bitcoin now sort of having their own time in the sun, if you will.
Yeah, I mean, the time in the sun is great, but not a lot of people are pointing the camera towards that time in the sun. There's probably 10 times more articles about how bad of a decision it was versus how good of a decision it turned out to be. So, I mean, I think that's the battle we've been fighting in this market, in the crypto space forever. I mean, it's been a rough go for certain types of fraud coming out. The market, it's just a roller coaster, but when in doubt, you zoom out. And Bitcoin's been the best performing asset over the past, 15 years or however many years now. But I think it should just be an obvious play as a country or a company, just I don't know how balance sheets work, but if you find an asset that is performing that well, I think it's a smart decision to at least allocate some towards it. So
sure. When I look at 6,000 Bitcoin, it really just puts into perspective 6,000 Bitcoin that El Salvador owns. It really puts into perspective just how much Bitcoin MicroStrategy owns, first off, for me, and second off, just how much of a blowaway success these ETFs have been, that they're doing multiples of what El Salvador has really put a lot of money into nonetheless. So, but moving on, we've got a story about ETF odds plummeting for an Ethereum ETF. Let's see if we can get that up on the screen right now. Odds have plummeted from 74% in January to 28% last week. So not looking too good on that front, Dugan. Obviously, this rally that we're in right now, people have attributed it to the runaway success of Bitcoin ETFs, attracting billions of dollars of inflows each week. But, as the SEC has delayed BlackRock and Fidelity spot Ethereum ETF applications, people are saying that's not necessarily a good sign. Last week, you saw Bloomberg's ETF analysts come down to about 35% as well. People have been fixated on May 23rd as the decision deadline for VanEck's spot Ethereum application. So we're bound to see more speculation ahead of then. But Dugan, a very big shift in just a couple of months in terms of these expectations for an ETF getting approved.
Crazy. I mean, that is a big drop, but it's also, what are these odds? I mean, I feel like maybe just throwing out some numbers like, oh, that's looking, I don't know. I think the odds are 50-50. It happens or it doesn't. But in all seriousness, I think that Ethereum in general, like the CFTC and the SEC have been at odds with each other for whether or not ETH is a commodity or not. And since there's already futures products on ETH that you can trade, then it seems to me that it could be a little bit written in the cards that like, okay, maybe an ETF is sure to follow. And truthfully, the powers that be, the guys with all the money, they've seen an incredible, almost like historic spot ETF rollout, and I'm sure that they're itching to get their hands on the next play just because of how well Bitcoin's performed. So I think they're gonna do whatever they can to try to push this one through, push this along the finish line. And sure, it gets delayed, but I feel like that's normal. I think the spot Bitcoin ETFs kept getting delayed as well. So
Yeah, that dragged its feet for a decade on a spot Bitcoin ETF in terms of high profile applicants trying to establish a fund of such. But, you know, regardless of these delays, you're still seeing some of these asset managers go through and file new applications. I mean, just the other week, I think on the show, we talked about the fact that Coinbase was meeting with the SEC and sort of pointing out, you know, qualities in the Ethereum spot market that are sort of similar to Bitcoin in terms of fraud and manipulation concerns. And fraud and manipulation was something that the SEC cited for quite a long time in swatting down these spot Bitcoin ETFs, sort of saying that the spot market for Bitcoin is distinct from that futures market. So as you mentioned, futures ETFs trading in the US, definitely something that might come into play in the future. We've actually got a tweet from Grayscale's CLO, Craig Salm, because on Friday, the asset manager amended its S1. Essentially, it's filing to sort of upgrade what is currently the Grayscale Ethereum Trust into a full-fledged ETF. He called it an important step in that process, and he said the case is just as strong. So for me, really bringing it back to this idea that there was this court case last summer that ultimately paved the way for these approvals, and Grayscale thinks the case is just as strong for Ethereum. Has an AUM at this point of $11 billion, so it's a pretty significant fund. And I've talked to people before that say, you know, really focus in on this discount to NAV. So essentially, like, because of the structure of the fund, there's no way for shares to be redeemed and they get sold on the open market. And this can lead to a premium or a discount at times as like the shares price fluctuate at a different rate, essentially, from what those underlying assets in the fund represent. And so just this month, you saw that discount shrink to just 8% relative to the holdings. Then it got as far as 18%, and now it's back to 16%. So as far as a barometer goes, I don't know, Dugan, what you're looking at in terms of these ETF approval odds. I know you've also got Democratic senators who recently urged the SEC not to approve Ethereum ETFs. They explicitly said that cryptocurrencies, not including Bitcoin, they do not show trading volumes or integrity to support these associated ETPs or exchange traded products. Specifically, LaFonza Butler of California and Jack Reed of Rhode Island, they also wrote the commission is under no obligation to approve such products, and given the risk, it should not do so. Dugan, pretty strong words coming against an ETF on the Democratic side of things, at least as Capitol Hill goes.
Yeah, I think they raised some valid points. It's like a little bit of an interesting take to say that it's exactly just as strong as Bitcoin. I mean, the protocols, as Ethereum used to be proof of work, it's proof of stake. There's a lot of different things going on with Ethereum right now, and as well as there was a pre-sale, there was a pre-mine. I mean, it wasn't just a thing of code given to the public as a commodity. So there's definitely a lot more nuance to this one. I don't know if it's just as strong. Maybe on certain levels it is, just in terms of people wanting to make the market out of it. But with Bitcoin, I mean, that one is strong. It is a commodity that is set in stone. But Ethereum, there's like centralized validator sets. There's a lot going on that I don't want to speak to too much, just because I'm not a foremost expert on it. But interesting to see those two get compared so tightly, when in reality, there's a lot of key differences.
I think what you're getting at, Dugan, is really the key thing here, is that Bitcoin, there was no questions over whether Bitcoin was a commodity before these ETFs were approved. Not so much when it comes to Ethereum. Still lingering questions there. SEC Chair Gary Gensler not coming out and forcefully saying, this we believe is a commodity, like the CFTC has said. So more on that front to be seen. But shifting a little bit, we've got Starbucks shutting down their Odyssey beta NFT rewards program. For me, I never used it, Dugan. I don't know about you. I just like to go and buy my cup of coffee. I'm not necessarily concerned about the rewards program associated with it. But for me, this was something I pointed to often in terms of trying to maybe justify crypto technology to a broader audience when it came to normal people and it came towards how companies were using it. I always like to point to this and said, hey, Starbucks is dipping their toes in the blockchain, so maybe there's some promise there. I don't know, Dugan, did you ever use it?
I actually didn't. I'm living in OC right now, so there's about 15 local coffee shops that I could walk to, and I'd get made fun of by my friends if they saw me with Starbucks. But with the loyalty program, I definitely would have dipped my toes in, but that was same with me. It was a point of validation because I'm the crypto guy in my friend groups. And so, that was just like, hey, look, Starbucks is doing it. This could be everywhere. NFTs are coming. And so very interesting to see at the start of this new bull rally, them sunsetting this is a little, it's interesting to see. At least we'll see how other companies.
It is a little bit surprising because I felt like that was the one that people actually was like, okay, this is successful. Like a lot of people are up, and it's Polygon based, which I think is significant in some respects too, because Polygon really is out there. They've got the DraftKings deal. Now they're doing content verification with Fox. So I really think in terms of courting those traditional sort of consumer brands, I think Polygon has done a good job in terms of being that chain that people use. The official FAQ that they came out with does sort of leave the door open to something new. They said, the Starbucks Odyssey beta must come to an end to prepare for what comes next as we continue to evolve the program, which sounds kind of nice. But if you go and you look online and you look on Twitter, at NFT Bark is his name. He was the community lead for this program. Sort of says, from silly inside jokes to custom gifts and a shared obsession with coffee, he'll miss a lovely community. And he said that the beta program has been sunset. So not necessarily a good sign in terms of the platform's future. Again, it's going to work. They have quests in there till March 25th. So I guess you have a little bit of time to dip your toes still, Dugan.
Yeah, maybe so. I don't know if I'll be dipping my toes in there, but with NFTs as a use case, I don't think they're dead. I think they just had their first baby steps of life, because really the technology is going to work. And I think the biggest one is going to be in gaming. Once we figure that out, it's going to be an open the floodgates moment, just because I think there's TV, movies, and music all equal the amount of money in gaming. And so if we can capture that kind of thing and combine it with NFTs, digital collectibles, allowing users to actually own the things they buy. People are spending hundreds of dollars on Fortnite skins, and the fact that you should just be able to own them and trade them. Just like you own anything else, like trading cards or anything in real life. So, we live in an increasingly digitalized world. And so I think giving people ownership over it, especially gamers who constantly have to pay for DLCs and pay for all this extra stuff, they're probably ready to get some money and value back in their own hands and their own pockets. So that's
Vitalik Buterin, known World of Warcraft player in the early days, so maybe some inspiration on that front. But you also talk about gaming. My blood gets I can feel it start to bubble up when I start to think about GTA 6. I know there's a ton of rumors there on that front. GTA 5 being I believe it was at the time the best selling anything ever in terms of media. That goes for movies, box offices, what have you not. So definitely a lot to be seen on the gaming front. But, maybe a game of musical chairs that we can shift to now that's going on in Solana. Definitely a high stakes one, Dugan. Solana's meme coin mania has pushed on-chain volumes and fees to a new all-time high. We've got a graphic for that we can show. This is a chart from the block. It's the 7-day moving average of active wallets on the network. And you can see it is spiking pretty hard. And if you're plugged into crypto Twitter, it was impossible to escape the meme coin mania over the Dugan. Whether it's people just sending massive millions, I'm talking millions of dollars to random people that they've never heard of before, just like post a chain, pre-sale, bada bing, bada boom, all of a sudden you've got a full-fledged meme coin and it's getting, massive multi-million dollar market caps on some of these decentralized exchanges, Dugan. I don't know what you make of all of this.
Crazy. I mean, I wouldn't say I'm surprised, because I think at the beginning of bull runs, that's the place people go. And especially as Bitcoin gets higher, they see big number and they're like, oh man, that's too big. But then they see all these little things that are like fractions of pennies and they're like, man, if that goes to $10, I'm going to be a millionaire. And so, and I think that's the general consensus, because they see these articles coming out of, oh, trader puts $450 in, and 3 days later it's now worth 1.1 million or something. And so with those kind of headlines, of course, it's going to attract a lot of people, a lot of traders into this ecosystem. And I think it's something that should be looked to as a good thing for our industry as a whole, because to be honest, meme coins might have been the thing that got me in this industry. And since then, I've learned a lot about it. And now I know that stacking sats is about the only way to go. And if you're going to be doing meme coins, you better be rotating all your profits back into Bitcoin. But it's, Solana taking the reins ahead of ETH in this meme coin rally right now. I mean,
Dugan, I had no idea that meme coins got you into crypto in general. And the only reason why, same here. 2019, it was Elon Musk pumping Dogecoin to like 69 cents. That was like the first time I ever transacted in crypto. And it was through Robinhood, of all things. Definitely have come a long way there. Now, dipping my own toes, using the Phantom wallet. But just like, if you look at some of these meme coins that are coming up, they're getting market capitalizations that rival like CryptoPunks. And I do think before you sort of saw like sort of this speculative fervor in the meme space, maybe like, or the NFT space last cycle. And now meme coins really do seem to be where people are really putting their attention, or at least maybe their speculative dollars. I wonder if that has to do with just how low the transaction fees are on Solana to an extent, where it makes it a little bit more accessible for people. Just to point out the numbers, guys, Solana's on-chain volume jumped to 3.8 billion on Thursday, which is a record. And meanwhile, Ethereum's on-chain volume was 3.9 billion. So they're basically like neck and neck on that day. That being said, earlier in the month, on-chain volume on Ethereum did jump to around $5 billion. So, I don't know about you, but I didn't expect, to be at this point now where it's like Solana is going punch for punch with Ethereum in terms of just this on-chain volume. And when it comes to like what's attractive and what's really drawing people's attention, the meme coin casino, Dugan, it's pretty evocative.
Oh, yeah. And it's got a nice ring to it, too. It's like, come on to the casino. You're joining the casino. That's just the thing. But with Solana at this point, it can't be ignored. And a lot of these groups that I'm in, watching, keeping an eye on the meme coin space, a lot of them are the ETH maxis. They call ETH daddy. They're like, all the volume will come back to daddy. And for a while, like they just were saying no to Solana. But at this point, everyone says it can't be ignored. You got to follow the volume. And right now, I think Solana did a good job with its whole airdrop bonk thing, because when traders, especially meme coin traders, see all that volume getting pumped up onto a certain chain, all of a sudden they're hitting the bridges and they're going over and starting to trade on that volume. And so I think we're going to see that as an effective marketing strategy moving forward for other chains. Just like we saw, I think, a tweet from Avalanche the other day that said, we're putting these 5 meme coins into our treasuries or something. So I think if you attract a meme coin and pump that thing up to 1 billion, you're going to get the users, you're going to get the volume, you're going to get the active wallet addresses. And with that, more builders will want to come on and build dApps to capture the user base. So I think it's an interesting way to market your chains these days. And in the meantime, if you're in the weeds, you can make a lot of money if you're in the right spot at the right time.
Yeah, real quickly, we're just going to pivot to Sam Bankman-Fried right here. Before we do, obviously, we're going to mention that Dog with Hat, is now going to be on the Vegas sphere, but we'll see how that goes. Moving over to Sam Bankman-Fried, prosecutors recommended a sentence of 40 to 50 years last week, Dugan. Obviously, he was found guilty of all 7 fraud and conspiracy charges in November after his months-long trial laid the collapse of FTX bare. I mean, Sam Bankman-Fried just turned 32 10 days ago. So a 50-year term would mean that he's 83 when he gets out of prison. He's scheduled to be sentenced on March 28th. And, technically he could face up to 110 years based off of what he's been charged with. His attorneys want 5 to 6 years. So definitely a little bit different from 40 to 50. And we'll see how that sentencing ends up going.
Yeah, that's a definite 5 to 6 years is kind of peanuts compared to the actual sentencing. So I don't know. I think it'll be interesting to see the way it plays out, especially with all the money that was involved. It'll be kind of telling, I think, how much money means in these kind of circles around staying in and out of prison for as long as you want. We'll see based off the sentencing how that really works.
More than $8 billion had gone missing. So definitely significant. I think it's interesting, right? Just for reference, Bernie Madoff was sentenced for 150 years. And, prosecutors have said we're not really looking for anything over 100, that could be excessive in some respect. But they said this 40 to 50 year term underscores the remarkably serious nature of the harm to thousands of victims. And what's interesting, right, is when you had sort of the defense make their case for 5 to 6 years, they came out and they had letters that, attested to Sam Bankman-Fried's character, whether it was, him being a vegan or effective altruism in terms of what he embodies. And the prosecutors did the same thing. One of the things that I found interesting is they ended up, publishing dozens of DMs that were sent to Sam Bankman-Fried's Twitter account in the days after FTX's collapse. And it's about several dozen of them. And I went through and just read them. And there's several in there that sort of mention this impact that FTX's collapse had on their family, whether it's, sort of kids that they had expected on the way or loved ones, in terms of paying for expenses. One father who lost most of his savings ended up saying, I am ashamed of myself when I have to look at his kids. And that was sent directly to Sam Bankman-Fried's inbox. So it's interesting to see the prosecutors sort of come out and sort of paint this picture of just sort of the emotional and the financial harm that thousands upon thousands of people endured as a result of this, dude. And I'm not sure if it's something that Judge Kaplan is going to weigh maybe more favorably, but probably not.
Yeah, I think it's not a bad thing to harp on because, man, I mean, all we do is work for money, and that's our life force. We put our life force and our time, and we get to spend money and use it how we want. And man, when you trust somebody with your money, yeah, especially when a lot of big companies, everybody's backing them. All your favorite celebrities are pushing them. It's on the Super Bowl everywhere. It can't be ignored. You're like, well, I can't. Everybody's telling me about this crypto thing, and it's a really sad thing for our industry, and especially for those people that put their money in there and lost it all. I mean, that is devastating. That ruins lives. That's just not something to mess around with. So I think it's good that it's yeah, we got to lock this guy up. We got to make an example, if you will, just because, I mean, we don't want more of these. We got to get rid of it. We got to get rid of that in this industry, man.
And they're being paid back in full, but when it's full, it's, $15 was the price of Solana when, FTX filed for bankruptcy. So there you go. There's your payout, but, that's neither here nor there. We're going to shift the conversation a little bit. We said we would have a guest expert on at 10:30. We've got Mishka from L2Beat here to discuss the impact of Denkun. Thanks for joining the show, buddy. Very excited to dig into some of this data. The era of Denkun is here. So we have cheap fees on L2s. Curious what your biggest takeaways are from the upgrade so far and the way things are looking on your end.
Yeah, so let me just start with repeating what Denkun really was. Denkun was the upgrade we had last week on Wednesday that enabled this, gave us this opportunity to attach new type of data to Ethereum. And why is it important? This is important for layer 2s, right? Layer 2s are using a lot of data that's posted on Ethereum, and so far they were using cold data. which was never built which was never built specifically for them. It was kind of a hack that people found, that cold data is a cheap way of posting data to Ethereum. And right now we have this special way, it's called blobs, for those L2s to post data on Ethereum. And the thing is that it's built specifically for them. So everyone needed to upgrade, and those upgrades were quite important because right now that was basically the last upgrade that those projects had to use. We know that the perfect smart contract is probably immutable, but because of how those rollups, how complicated those systems are, those smart rollup systems, they stay upgradable just in case there are bugs, obviously. But the thing is
I
that
kind of want to take a step back, Mishka, and really just kind of like point out the degree of cost savings that this upgrade has unlocked. I've got a story in front of me from DL News that says, the cost savings are close to 98% for some of these layer 2 networks. The average transaction on Starknet, for example, dropping from about like $1.35 down to 2 cents. I mean, is 98% sort of overstating these cost savings in your opinion, or is that in line with what you're seeing?
I would say that for what we have right now, we probably haven't reached the equilibrium yet. So the thing is that right now, because we have the separate market for data, for blobs, it's gonna probably rise because the demand right now we have a lot of space for cheap data, and this will cause some induced demand also, right? And because it's very cheap to transact on layer 2s, we will probably see increase in the usage of the layer 2s. So we will probably see another big, I mean, maybe not big spike, but we will see increase in the costs of transactions on layer 2s. But the thing is that proto-dunk sharding gave us this way to easily change the parameters of the systems, and what I was going through that I want to reach here. The layer 2s will not have to upgrade anymore, so the smart contracts will stay as they are right now. The only thing that's going to be changed and will give us more scalability is the introduction of data availability sampling, and probably so we will be able to have more blobs per block. So even though the costs will probably rise from now on, we will probably see this upgrade gave us this opportunity to see even better improvements in the future.
I see. So what you're saying is, because blobs have their own sort of fee market, as you put it, that costs on these layer 2s could increase a little bit, but as far as what the upgrade did in terms of setting the stage for future upgrades to bring that back down further, that's what you're seeing, sort of.
Exactly. And this Denkun upgrade, it was a really big one, and it required a lot of changes in the smart contract of rollups. But they will not have to do anything anymore. It's basically parameter change.
Yeah, there's one chart that you wanted us to show on this show, and it has to do with L2 transactions and sort of TPS ticking up in the aftermath. It's the other one that we ended up pulling. TPS ticking up in the aftermath of Denkuns. Are you expecting this to increase further? By how much? Or is that like, would you say that increase in TPS is even a direct result of Denkun?
I would. It's hard to say talk about future here, but it does look like because of the cheap fees, people were very excited to use layer 2s. Although the chart shown there is also including validiums. So this is not only directly related to Ethereum. However, we can see that. For example, on zk-Sync, we are seeing a little bit bigger transactions per second. So people are excited about what's happening now. The thing is that because it's cheaper, people will keep posting transactions until we will get a little bit more congested. And right now, in the near future, also not all of the rollups have upgraded so far. And the more rollups start using the blobs, we'll probably see a little bit of an increase in those transaction costs.
Yeah, we it's funny you mentioned blobs. We've got a dashboard, a Dune dashboard that we wanted to show you, which, when you show it on screen, the second Dune dashboard that we're trying to show, you've got this sort of intermittent posting of blobs that I ended up seeing. Can you explain what's going on here when we look at this?
So the thing is that this is a chart that's showing us blobs per block, and we can see that in some moments there's a lot more blobs posted than in others, and also some blocks include 6 blocks, some blocks include around 3 blocks, which is the target, and some blocks don't include any, and the bigger lines on this chart were showing when, for example, Starknet was posting transaction, and this is specifically connected to how they are posting the data on chain. And thanks to us having several different implementations of rollups, several different projects that are building a rollup, we can see in the future which of those approaches is the best, which of those approaches gives us the best guarantees, the best transaction finality time, or the best compression rate. For example, it's we are working on making another page that will show us the true costs of every layer 2, and we want to include also the proving cost, which is a very important cost of a ZK rollup that, for example, that optimistic rollup like Arbitrum or Optimism don't have to think about at all. So this is something that we are cooking in, and I'm really excited for the future to see what are the best use cases and how the rollups can best utilize the extra data that blobs bring.
When I talked to one person initially about Denkun, one of the things that they sort of talked about is, you talk about the possibilities in terms of what developers can do. And they sort of said that this paves the way for more data intensive apps. The ability to include more data on chain now. I'm curious about your thoughts about that, and, what else you're going to be looking at as the situation develops a little bit further.
So from my side, I will definitely keep looking mostly at rollups because this upgrade was built specifically for them, as I mentioned on the beginning. So I think that I will definitely focus on those. But I'm very excited about the fact that with proto dunk sharding and then with full dunk sharding, we can actually reach a moment that the amount of computation that Ethereum as a network can do is greater than the computation of one node. So the amount of data that we can store in the network is more than one particular full node is storing. And this is very exciting, but we need to wait for data availability sampling to be a part of full dunk sharding. However, I definitely agree that this opens. So just like cold data was a hack, right? It was never intended for rollups to post data on Ethereum, but they were using it, and people built huge projects with that. I expect that probably somebody will find a way to use blobs in different way than a rollup, and maybe we'll see a huge project in the future that's using this new territory in a way that we haven't even imagined.
I do get excited about that, the weird use cases for this technology. I saw on Twitter that people are doing like blobscriptions, so sort of taking inscriptions and trying to do them on blob space or something to that effect. But definitely to be seen. Mishka, I saw you were on the floor at ETH Denver. Curious about your takeaways from the conference and just sort of like attitudes on the ground representing L2Beat.
ETH Denver. It was my first time there. It was a huge conference, and seeing the amount of people that are really involved in this space and having so many meaningful conversations, it just gives me more motivation to work on what I do. And yeah, if you want to see live what rollups are using blobs right now, we have a new data availability page on L2Bit, so you're definitely welcome to check that out.
It definitely something that people should check out. But, I think that's going to be it for us, Mishka. And, Dugan, thanks for joining me on the show today, buddy. It was nice to have you on. We went through these headlines and, I'm curious if you have any parting thoughts, any nuggets of wisdom for the crowds as they look forward to the week.
Man, well, thanks for having me on. It was a blast. Yeah, I mean, I think this was another average week in crypto, which there is never a dull moment. And I think, especially as Bitcoin's hitting all-time highs pre-halving, this might be a bigger bull run than we're all expecting. And you mentioned WIF, and they're buying ads on the Sphere. I mean, it's going to get crazy. And I think when you want to take profits, be a little careful, because there's certain sites that you can put your wallet address in, and then all of a sudden it'll show you like, oh, if you didn't sell too early, you would have made X amount of money. So I feel like we got to be ready.
I actually clicked on one of those, Dugan. I did a story. People should go check it out. I clicked on 10 crypto Twitter ads, including one of those ones where, it said like, check out how much money you missed. Surprise, it took my money. It was a wallet drainer. So that's neither here nor there. The ridiculousness is just getting started. People are excited about crypto. Thanks, Dugan, for coming on the show. That's going to be it from me, everybody. I'm Andre Bagansky, the head writer of Coinage. Zach will be back soon, but until then, I'm here for you.